What's going on, everybody? Welcome to the Wicked Prepping YouTube channel. What you're about to see is highlights from our past stream. If you'd like to see the whole stream, you can click the link in the description box below, which will take you to an unlisted video showing the whole podcast. We stream usually 3 times a week on Twitch. If you would like to follow us, join the conversation, smash that like button here on YouTube, follow us on Twitch, and let's start talking.
All teams ready?
You are missing land. Resistance is futile.
Yeah, so I want to start off real quick with a short little quote here from an article. This was in April, so it's a little out of date, but what they're saying sort of sets the stage for the Fed. So the article wrote that the Fed has led the charge, and they were referring to central banks around the world, offering to buy unlimited amounts of U.S. government bonds and mortgage-backed securities, as well as lend trillions more to corporations and municipalities through temporary purchases of their obligations. And the reason they're doing that is because you have global investors seeking to unwind years' worth of accumulated leverage. And that's critical because the Fed is doing all this not because of you and me, not because of the middle class. They're doing this for the 1% because we've been in a 12, 13-year bull run where the ultra rich piled into very high risk investments because everything was great. We were in a bull market, everything's going up, and they got incredibly wealthy with it.
Right.
They were getting paid very high returns on that. And as it went on, you start pouring more and more into those, you start adding margin, and just over time, you get leverage more and more in. Problem being, you're getting a very high return because it's a very high risk instrument. And when things don't do good and things don't go well, you lose a crap load of money. And so basically the Fed is bailing out the 1% who are in all of these investments that were high risk so that they made a ton of money. And now when the risk comes in and the other side of the market plays out and they were going to lose money, they're bailing them out. Now, I know people should be asking, wait a minute, I thought that the Fed could only buy government-backed securities. So in other words, treasuries and mortgage-backed securities that are backed by like Fannie Mae, Freddie Mac, things that are backed by the government. Well, that is true, but as there always is with laws in the federal government, they're getting around those requirements through Section 13.3 of the Federal Reserve Act back from 1913. Which allows the Fed to basically create a facility, a credit facility, designed to buy all those other special types of debt, and then they lend to that, and the asset then goes to their balance sheet. So I kind of diagrammed it here because this is what the Fed is very confusing. And, you know, a lot of people focus on the interest rate and what they do with that. But when it comes to quantitative easing, they've taken it to a whole nother level because now they're not just buying mortgage-backed securities and government treasuries. Now they're actually owning debt in private companies, cities, municipalities, things that aren't backed by the government. So basically, they set up a facility. Now, let's be honest, that's AKA shell company. Okay, that's all that is. You hear about shell companies all the time. They set up a shell company. The shell company buys that private debt or equity. They're now starting to purchase ETF issuances and things. And I think they'll eventually get to straight equities. I think they'll get to common stock. They've already done that to some degree with the airlines. They have warrants or options. With American, I think it's for 51 plus million shares of stock and whatnot. But they set up this shell company. The shell company buys the private debtor equity. So the facility holds the asset. The Fed prints money digitally, gives it to the facility, and then the asset transfers to the Fed. So basically, they're they're basically buying it themselves. They're doing it through a shell company. Problem with that is that these are high risk debts that they're buying. So what they're doing is they're bailing out big business and they're letting the elite off the hook. The elite reaps the benefits while the bull market was running, and now we, the middle class, take all the risk and losses because we're on the hook for all these high risk debts that aren't going to pay off. They're going to go bad. They're going to go down. We're going to lose the money, and we're on the hook for it because it's our faith in credit that's on the line. The government has no faith in credit. It's the taxpayers. And when we refer to the taxpayers, it's the middle class. So we had talked about this before in a stream, and I just kind of want to diagram a little so people can understand exactly what the Fed is doing. You know, it's shady crap, shell companies moving money around, and all these trillions of dollars that they're pumping into liquidity is just bailing out big business, letting the elite off the hook, and they're not even buying this stuff at like market prices. The rich are actually doing well. They're making more money off these because as they pump the liquidity into these high risk debts, they're going up. So as they sell out, they're actually making even more profit on it and getting out so that they're not holding the bag when it goes down. We are. And you can see here's just the Fed's asset, the freaking balance sheet with the assets. And you can see the shaded area was the financial crisis of late 2007 into 2009. And you can see where they bumped into QE1 and pumped it up. And they've just continued to pump it up and pump it up. And we got back to 2018. They tried to start going into quantitative restriction, kind of restricting it, selling off some of those assets. Market didn't like it. It crashed at the end of 2018. Then we went into the overnight repo bailouts because all our financial plumbing started to break. So it started to build back up. And then you've got the pandemic and bam, that's how quickly they pumped in. We're now over 7 trillion in bailouts and redistributions. And the Fed has declared that it has no limit on how much it's willing to spend, i.e. print, in order until everything gets back to normal. So with a printing machine and a blank check from the middle class, it's highly likely that we're ultimately going to eclipse 10 trillion, if not push it even higher, because I think things aren't going to get better quickly. I think they're going to get worse, and they're going to have to continue to pump money in. Now, switching from the Fed, let's look at the government and what the condition is with the government. So right now for this year, the government's on pace to actually spend $6.8 trillion. That's not their budget. That's what they're going to spend. Their actual tax revenue that they're going to take in this year from all sources is about 3.2 trillion. Now let's understand the year's not over. This actual spend is going up and the actual revenue is going down because businesses aren't making money. People are out of work. They're not paying taxes. So this is going to widen tremendously. But best case scenario, we're going to have a budget deficit just this year of $3.5 trillion. So that's another $3.5 trillion that we're going to have to borrow or print. Right now, the national debt's at 25.6 trillion. And it's crazy because I can remember just a few years ago, we came up against the 10 trillion ceiling. And we had all these battles on Capitol Hill over, are we going to extend it? We're at 25.6 trillion. What's crazy about that, that's 8 times our actual revenue right now. And that revenue is going to go down. So that multiple is going to go up. You got to think about that like if you're going to buy a house. When you go to buy a house, typically you're going to buy a house that's priced up to about 2 to 2.5 times your annual income. So if you make $100,000 a year, you're going to look for something in the 200 to 250 range, 2 to 2.5 times. That's what a bank's going to loan you money on. Right now, best case scenario, we're at 8 times that, and we're adding 3.5 trillion plus a year on top of that. The interest payment on that debt right now is $384 million a year. Importantly, that's at an average of 1.5% interest. Now, if that interest rate was to start going up, let's say it goes to 5%, which is completely reasonable, we would annually be paying $1.3 trillion in interest alone. That's equal to our largest budget item, Medicare and Medicaid, at 1.3 trillion. That's twice our defense budget, and it would be 40% of all our revenue. So in other words, for every dollar collected, 40 cents would be going just to pay interest back to everybody that lent us money. That's insane, because that means either A, services would have to get tremendously cut, or you're going to have to borrow more and more and run a bigger and bigger deficit. Where we're getting at with this is that I would classify the U.S. as a zombie country at this point. Now, you've probably heard of zombie companies. A zombie company, they're indebted businesses that, although they may or may not generate cash, after covering their running costs, their fixed costs, wages, rent, all that kind of stuff, they only have enough funds to service the interest on their loans, but they can't pay the debt itself. They can't pay back the principal. So they generally depend on their banks and creditors for continued existence. They effectively are putting them on never-ending life support. Every time, you have to understand, when you have a bond out there or a loan, you pay interest every month or every year or whatnot for the terms of that loan. At the end of that bond, when it becomes due, you got to pay the principal back. So a zombie company can pay the interest every payment that comes up, but when it gets to the end of the cycle, they can't pay the principal back. So they depend upon their creditors rolling that debt over and basically reissuing it. So whoever the lender is continues to collect interest for another year, 5 years, 10 years, whatever the duration of that bond is. What the problem is, we're in exactly the same boat, only it's worse because we're running deficits. We have to not only roll over all our debt and most of our national debt is on very short-term bonds. They're very short-term loans, so we're constantly rolling them over. But we not only have to count on other countries and investors that are buying those treasuries to be willing to roll them over, but because of our deficits, we have to bring in even more people. So we're borrowing money to pay our interest. And at some point in time, once the rest of the world realizes this and accepts this, it's game over. The dollar is going to be dropped as the reserve currency, and it's going to collapse. And we're pretty close to that point. You know, when we start pushing 10 times, you're going to get to a point where we basically have to shut the country down to repay things. And people are going to realize, and this is where it kind of brings in China and all these foreign investments, they're going to realize we're never going to get that money back. And when that starts to happen, the control is going to switch from us to all these other people. And we're going to find ourselves having to accept and sign on to things that we otherwise never would have, but we're going to have no power and no control because we're going to collapse. And that's where you kind of get into the New World Order and the UN Agenda 21 and 2030 and this plan that they're unfolding and have been doing so for decades, putting all the framework in place. And yeah, obviously under normal circumstances, we'd never accept these things. But as China's power grows and the UN power grows, we're going to have to agree to things when our economic strength collapses and it's not there. And all the framework and everything is in place. You know, and you get people, and you can take it off, man. Yeah, that was it on the slides. But, you know, you get these people that say, oh, well, you know, People have been talking about this Agenda 21 and 2030 for years and years and years, and it's all tinfoil hat conspiracies and whatnot. You have to understand that the plan has been out there from day one, and they've been implementing that plan, the framework of it, putting in place. We don't know when the world is going to say that's it for the dollar, but when that happens, we will have to accept the UN role. We will have to sign on to things because it will be compelled upon us in order to get loans and get money and to deal with our situation. So it could be another 10 years. We don't know when that's going to happen, but you've got to look at everything going on and how they're setting everything up. And while at this moment in time, we might not, as Americans, accept that, and we're like, you're crazy, we're not taking it. Right. There's going to come a day, because we are a superpower in decline, that our economy is going to put us in a position where we have to accept it. And it's inevitable. At this point, and I don't like to be the negative guy or what, but it's done. Like, I agree. We were borrowing and borrowing against our future, but we're at a point where we've borrowed more than our future could ever produce. So we're never going to get out. We can't dig our way out of the hole anymore. We're past the point of no control or no return. So at some point in time, we're going to lose that control, and all these things that are in place now are going to come to be. So that kind of feeds, the broader conversation we've been having about China, because they're going to continue to expand their sphere of economic control, which is going to start impacting more and more countries around the world. They're going to be controlling them. We look to China and all these other countries to buy our treasuries, to keep, turning over our debt, even though we can't pay the principal, reissuing it to us. And then on top of that, giving us more money. And at some point in time, that merry-go-round's going to stop. And China's going to be involved in that. And we're going to be in a bad spot.
Yeah, I agree with you. And that, unfortunately, that's kind of been the direction that China and Russia have been really trying to get this country to go for a long time. Obviously, Russia never had the economic power to do that, but they were really close allies with China for a reason, with that goal, because if they could collapse our government and get some of our power taken away, we would no longer be such a threat. It'd be a way to neutralize their threat. It's a chess type move.
Yeah.
And like I said, it's just funny. 15 years ago, these things were conspiracy theories. What's happening, what's unfolding in front of us, was conspiracy. It was xenophobia. It was racism, or whatever. People, the left, and even some of the right, really wanted to, the people on the right that wanted to keep strong trades with China would defend China. The people on the left that wanted to bring emotion into it, they would, both sides of the argument were, for China. And that's why I always thought it was interesting about our bipartisan, that's like the one thing we could agree on. And then you get people like Trump, who's kind of more in the middle in terms of right or left. He's not so far right that he's crazy. He's not so far left, but he saw the danger of allowing unchecked trade and control, keep giving it over to China, and he started taking a stand against it, and he got a lot of pushback for it. I don't know if you remember, that was one of the first things he did, was block a lot of trades and a lot of stocks from being traded on the stock market and stuff like that, and people start calling him racist and everything else. Like I said, just really bringing the emotion into the argument. He was like, it has nothing to do with race, it has to do with their motive, it has to do with their history, their track record, and what their companies are doing. And so it's just interesting that now more and more companies, now it's becoming accepted to do this. Now it's becoming accepted that as Americans, China poses a real threat to us. And now that, these investors and these people that normally wouldn't get politically involved, or they wouldn't have the same type of sentiment, once they see that their money is on the decline and they have a pretty significant source to blame, it's easy for them now to say, oh yeah, we have to do something about this. Look at this threat. You know what I mean?
Yeah, I mean, the problem being that short of an all-out Cold War, we don't have a lot of options. We've spent away all our options, because like we talked about the other night, it's not about military power, it's about economic power, and we're on the decline. We don't have the economic power we used to have. Like, we're going to get to a point where we are entirely dependent upon outside loans to us, people loaning us money, and that's a problem. So we're very limited now on how we can respond to China. Like, we should have responded a long time ago when we had freedom to do that. Now it's going to cost us dearly to battle that. And we have to. We don't have an option. It's the moral right thing to do, that we have to battle that, but it's going to cost us bad, because we just don't have the economic strength that we used to have. And there's going to come a point at which the world wakes up and says, we're not loaning you any more money, and maybe we want our money back, or we'll loan you more money, but we want a higher interest rate.
Right.
And it's just a downward spiral. Like, we're so far in the hole, we're never getting out. And at some point in time, the music stops and you don't have a chair. And that's where we're going to get. And you're going to get pressure mounting from the world for us to sign on to more and more UN control and slowly eroding our sovereignty. And it's inescapable. We don't like that. I know it's not popular, but short of a reset and basically a Cold War, potentially, an active war, that we don't have a whole lot of options, because we've spent our future and spent that money away, and we can't really dig out of it. So the music's going to stop at some point. So it's frustrating, because in the West, and especially the US, like we talked about, we tend to look at, like, the market used to be forward looking. You'll hear this all the time. The market used to look 5 to 10 years down the road. Then it was 3 to 5 years down the road. Then it was 1 to 3 years down the road. The fact of the matter is, today, your institutional investors and whatnot are looking 1 year down the road. It's what are we going to do this year? Because if we don't do well this year, everybody's going to leave our fund and move their money somewhere else. Our time horizon is shortened and shortened and shortened with the attention span of a fly. And we all do that. We're very short-sighted. Right. And like we talked about the other night, China's the exact opposite. They have the Eastern mentality and mindset that looks at things 50 years down the road, 100 years down the road. And China doesn't give a damn how bad it gets for 5 years. And they're in a position where they have absolute iron fist control over their population. They don't care how bad it gets for them. They'll take whatever economic hit they've got to fight us, knowing that 50 years from now or 100 years from now, they're going to dominate the world. And they're willing to, A, pay the upfront costs for that, and B, the ability to look down the road. And Americans, we just look 1 year down the road, 1 year down the road. It's like we're racing around in our cars. How fast can I go? Not looking at all where we're going, where we're driving. We have no clue where we're going. And
I agree.
Now we've dug a hole we're never going to get out of. We're basically a zombie country, and people are starting to wake up and realize it, but it's too late.